Hi, this is Rick LaPointe with PartTimeTrader.com. Today is July 21st, and we're looking at the S&P 500. Now, last week we were watching these 3 days as it hit the downtrend line from April. And I mentioned on this third day that if we don't break out soon, the path of least resistance is down. And sure enough, the very next day we had this big long candle on high volume. Now, yesterday, we had an up day, the excuse being the good numbers that came from Apple. But if you notice that we opened and then dropped some, and we hit the Fibonacci 38% line. And then from there, we pretty much had a trend day up all day long, almost kissing the 62% Fibonacci. Now, at the time, I mentioned that we are so close now to this trend line again that it becomes a tempting target, and most likely we are going to test that line again tomorrow. Well, sure enough, today it did that very same thing. We opened here at the 50-day moving average, rose up and hit that trend line once again, and pretty much hovered in this area for the rest of the day until about that 2 o'clock classic time when somebody pulled the rug and then we dumped. Now, if you notice that the low of today, before we bounced slightly at the end, was where we opened a couple days ago. Okay, minor little support place there. But the excuse was that Bernanke made negative comments about the economy, and so the market didn't like that, and so it tanked. Well, Bernanke's been making those comments about the market for a little while now, and so that shouldn't have been any big surprise. But we have been watching this line, expecting pretty much today's actions, and so it's just another one of those cases where the chart and the news junctioned at one place and was the catalyst necessary to do what the chart was suggesting was going to happen anyway. Okay, so now tomorrow, I'm guessing we're going to at least test this Fibonacci line here, and which coincides with yesterday's low. If we hold that line, then the bears aren't in a real hurry to continue down. If we break that line, then we've got some support about 1048-ish, but we're probably going to be after that 23% Fibonacci line down here, which, as you can see, is a much stronger support area from May and June. Now, let's say that we only come down and test the low of 2 days ago. Then we have the opportunity, I would think, of coming back up and trying to test yesterday's high. If not, we may come in this area right here. We've got a minor support from last week that we can look at here. All in all, though, I think we need some very positive news to break out of the 1090 area, in which case the next test, of course, is going to be the 1100. If that was to happen tomorrow, that 1100 area would junction with our secondary downtrend line from May, but it's got quite a jump to get there, and the longer it takes, the lower this line goes. Also keep in mind, we're in this little area here that coincides with this area here, this kind of mud zone, if you will. And we may be bouncing back and forth in this general area for a little bit. Hard to say. Now, the interesting thing to keep in mind is that tomorrow we have the unemployment reports and we have the housing report. Both of which, I guess there's two unemployment. So all those reports I'm expecting to be rather negative. I can't possibly imagine positive numbers at this point, but hey, anything can happen. So anyway, that's what I'm looking for tomorrow. Maybe we'll be surprised, maybe we won't. But until tomorrow, this is Rick LaPointe at PartTimeTrader.com.